Fox Business Alert: Apple's Worldwide Developer Conference kicks off 1 p.m. Eastern Time on Monday, and this one might be its most important yet. Amid questions Apple's fallen behind in the AI race, investors are very eager to get a better sense of how the tech giant is responding to the global AI boom. While Apple is totally tight-lipped as usual about what's to come, the internet is rife with speculation. Some of the guesses: that AI capabilities will be woven into iOS 18, maybe an AI update to Siri, a possible announcement about the iPhone's next chip processor, the A18, and what it can do. Apple also in the market cap battle with Nvidia right now after the semiconductor giant crossed the $3 trillion mark for the first time ever this week. But right now, Nvidia's back below $3 trillion at $2.96 trillion, and Apple has retaken the crown just above $3 trillion. Longtime tech investor Dan Niles is thinking out of the Magnificent Seven box and says Apple might have the best chance for outperformance through the year end, despite being up just 1% this year. Let's bring in the founder and portfolio manager of Niles Investment Management, joining me now. Dan, you like Apple. So what is your best thesis, your best investment case right now?
If you've been a bull on Apple for anywhere over the last 5 years, the stock may have gone up, but that was driven by multiple expansion. It's not driven by revenue growth. If you look at, for example, the March quarter they just reported, it was down 4% year over year. If you look at the Magnificent Seven, they were up 46%. You look at it this March quarter relative to 3 years ago, the revenues were up a whopping 1%. The Magnificent Seven are up 90. So you absolutely had no growth for a long period of time, and now Apple, after being behind with introducing AI on their smartphones, which, by the way, you can get AI on smartphones from most of the other leading manufacturers, they're going to introduce that at the Worldwide Developers Conference, and I think that might enable them to get an upgrade cycle going. Not keen on the valuation, but as we've seen with GameStop again recently, the market cares very little about valuations these days, and so I think, the fundamentals of potentially there being an upgrade cycle is enough to get the stock going. And we've gotten some fundamental data points that on the margin look good already. Sales in China for iPhones up 52% year over year. Best Buy talked about their new redesigned iPads also selling incredibly well, helping drive their business. So you're actually getting the fundamentals turning already before the new phones.
I get that. And yet we still haven't heard, we expect to hear more on Monday, about what they promise can be done with AI, weaving it into something, whether it's the operating system or the watch, the phone, what have you. What would you love to hear on Monday?
Well, I mean, it'd be great to get something where you go, wow, this is a really great feature to have on the phone and to do it natively. And, hopefully Apple would have a really good relationship with whoever they choose. Honestly, I don't expect necessarily a wow factor coming out of it, but Apple hasn't had an innovative product in a very, very long time on their iPhone. So this will be a new feature that obviously everybody, unless you've been living under a rock, has heard about AI. Mm-hmm. And it's actually useful if you're trying it out on your PC already. And so to have it natively run on your iPhone, I think that would get a lot of people to say, you know what, I haven't upgraded since I bought a phone during COVID because I really needed to. That was in 2020. Yeah, you know what, maybe I'll go ahead and upgrade because I've made so much money in the stock market and I have a job and my wages are going up. Sure, I'll go ahead and splurge on an iPhone, and I think that could happen.
You also like NVIDIA, but if you look at 30,000 feet, we just found out that the Department of Justice and the FTC are potentially launching investigations, antitrust investigations into Microsoft, OpenAI, and there's a third one here, Microsoft, NVIDIA. Yeah, KeyBank Capital just released an industry note saying that the investigations could actually make companies more hesitant to come out with big, new, splashy announcements like this. Have you looked into how that type of investigation or regulation, which we know would most likely be coming, could affect these stocks over the long run?
Yeah, I don't think it's going to slow these companies down from innovating because the last time I checked, you shouldn't get punished for innovation, though the government's trying its darn best to do it. But these are tech companies. It's either innovate or die, and they're all doing it. And NVIDIA's gotten to where it is, not because they've acquired a ton of companies, but because Jensen started working on this technology. You could argue this is success, overnight success, 30 years in the making, because a lot of these thoughts were happening decades ago, and they've been investing into it. Mm-hmm. And so I'm not spending any time really thinking about it. Is it going to be an overhang? Are you going to hear news stories? Absolutely.
Okay.
But the way some of these companies have gotten there, to me at least, is perfectly legal. They just innovated their way to the top.
Okay, got it. I want to bring up Tesla. Last year, you closed out a short position, but when you were on our show on February, you had said you would be looking to re-short Tesla on any bounce that you've seen. Have you reopened a position, a short position against Tesla, and what level, if not, are you waiting for the stock?
Yeah, I'm not currently short the stock right now. Obviously, the stock has underperformed. You've got a shareholder vote coming up next week on Elon Musk's pay package, which, to me, it's ridiculous that you sign a contract and then you go ahead and have that negated. Mm-hmm. So I really hope that they vote in favor for that, because he deserves it. He's created a ton of value for clients. Having said that, if you look at the stock, if you get a big relief rally, the fundamental picture hasn't unfortunately still changed, which is EV demand globally is not that strong. Tesla had down revenues year over year for the first time since 2020 during the heat of COVID. And financing costs, because interest rates have gone up, are making things more difficult to buy a car. So all of that exists, and you've got a very high PE multiple as well. So on Tesla, they're in a tough spot right now, but a positive vote for his pay package would obviously get him more incentivized to put some of the AI features into Tesla versus, X or XAI or, his other ventures.
Just to clarify, are you still in that camp where if you see a bounce, let's just say the pay package is reapproved and the stock gets a bounce, would you then short it?
I mean, there's so many other factors, Liz, but let me put you this way. From a fundamental basis, combined with valuations being this high, there are a lot of other companies that I'd much rather be long than Tesla. Okay. And so I lean negatively in terms of my views on the stock on a bounce.
Gotcha. And by the way, for those of you who are wondering, forward PE for Tesla is now at 70. Dan, great to see you once again. Please come back.
My pleasure, Liz.
Dan Niles.